So today I will cover two companies. The first one is Google, second one is Microsoft. Here's the structure. I will go through a couple of slides similar to the prior week's session, and then I will talk a bit more about the business. It could be stuff that I find interesting from the earnings release, or it could be something that I just think is important to rehash again about the business model and so on. Let's look at the total revenues. This is the financial quarter, meaning 3 months revenues. The latest quarter is 88 billion revenue. So we can see that this is highest record, right? And then let's say if we look at past 12 months or rolling 12 months, you can see there's a clear trend upwards. So this trend upwards, right, you can see that from 2021 to 2022, there's an increase, and then it flattened around 2023, right? It's kind of like slow growth already. Then now I think the good things is that we have seen that the growth has picked up again. Rolling 12-month basis, the revenue is 339 billions or close to 340 billions. That's quite impressive for companies that, they don't even make things, right? It's not like car companies that manufacturing cars. This is just Google. You can call it like a advertising business, and yet they are pulling in $340 billion on an annual basis. So very impressive. Okay, just to let you compare how impressive it is, right? 340 billions rank them number 12 across all public companies. These are the top companies here. You can see that, the largest companies in terms of revenues are companies like, usually it's like, groceries markets. Right? For example, Walmart, 600 plus billions. Amazon also huge, 600 plus billions. But Google, 340 billions. This is not updated. Still like very impressive. Next one, sometimes when we look at the revenue, it's big, but maybe it's slow growing. But just to let you see that this growth, right, what's the percentage that we are talking about? This is comparing to the same quarter last year. So it is 15% growth rate now. I would say 15%, as long as it's more than 10%, especially on such a big base, right? I would say this is a very healthy growth rate. And then next one, we look at the profit margin. As you can see here, the gross profit margin of Google is at 58.68%. It's also a historical record, right? So you have seen some other quarters when they are low, it could be as low as, like about 50% or 53%. But overall basis, I would say for Google, right, because they are in high margin business, so advertising, serving ads, right, these are really, they don't deal with a lot with the, physical stuff, right? It's not like they need physical factories. So usually companies like this, more towards tech side, more towards software, the revenues or the margin will be a lot better. And here we can see that it's 58%, very healthy profit margin. Then of course, when it comes to net margins, it's close to 30%. It's also very, very impressive. When people argue that, should I invest in Tesla? Tesla is a low margin business. You need to compare low margin versus what kind of companies that have high margin, right? Definitely Google is one of the companies that have super impressive margins. It's at 30%. One side you have revenue, which is growing 15%. And then at the same time, you look at the margin, is still high margin, is still going up slightly. So you combine this together, of course, the net income is going well, right? So you can see that just in one quarter, right, they made $26 billion of net income. And I mean, even if you look at net income, it's not a flat or a smooth upward. So similarly, you look at the pattern, right, around 2021, and then it came down in 2022, right? There's like mini recessions or tech corrections around end of 2022. And then after that, just picked up. And now we see that the latest quarter, the result definitely looks impressive, 26 billion. Rolling 12-month basis, right now, their net income is at 94 billions. Almost 100 billions of net income just in 1 year. You look at companies, right? Even companies like high-profile companies, maybe I can name, maybe Palantir, right? I don't think their market cap is like much bigger than this kind of number. So 100 billions of net income. This is not revenue. This is net income. It's like really, really companies that is earning huge sum of money every year. And they are tracking well, right? In terms of revenue growth, in terms of margin, still improving. I think this is, from financial perspective, right, very impressive. Then the question is, does all the net income flow into the free cash flow, right? Because remember, there are some companies, they just need to reinvest a lot and they are not able to generate so much free cash flow, right? But in the case of Google, definitely a lot of all this net income, right, actually flow to free cash flow. You see, in latest quarter, they made like 17.6 billion of free cash flow, and over a rolling 12 12-month basis, they made actually 56 billion of free cash flow. Meaning that actually if they want, right, these 56 billions, they can actually return to the shareholders in the form of dividends plus share buyback. And that's how outstanding shares can shrink, right? And if you just own these companies' shares, you just do nothing, right? Over time, your percentage ownership of the companies will increase over time by just doing nothing, right? If you observe the trend closely, in terms of free cash flow, it's definitely not at all-time high. It's actually trending down over the recent few quarters. I don't have a solid explanation of this. My take is only that they are spending a lot when it comes to their capital expenditures or capex. They're actually spending a lot, and I think they are also spending a lot on all the AI related expenses. So particularly it will be the GPUs, the data center. They didn't need to build all these things for their AI and so on. But still, we're talking about 56 billion free cash flow, right? It's not like they are using all their net income for capex, then no money left, right? Still left with 56 billions, a very healthy amount of free cash flow. And remember, all this capex, right, it's not like spent then it's gone, right? It's actually spent because they want to take advantage of the opportunity, and all this capex will in turn help to boost up their revenues, boost up their net income in the future. So these are the capex that is required to spend and to make sure that they maintain their leads when it comes to AI, when it comes to all sorts of software related stuff, when it comes to cloud offerings. Definitely numbers wise, I'm not concerned with this slight downturn in terms of their free cash flow. Okay, now we have seen the quarterly numbers, right? I think the next questions to answer is whether this company is expensive or they are cheap. So the first thing that I'm looking at, as usual, is PE ratio, and specifically I'm looking at forward PE. Right now, forward PE is at 20 times. So 20 times, right? If I recall correctly, this forward PE, right, is actually lower than S&P 500 forward PE. So I recall S&P 500 is probably around 24, if I remember correctly. But for Google's, it's at only 20 times. I won't say it is that cheap, but definitely it is not expensive. So sometimes, people say that, oh, big tech, all the big tech definitely is expensive, or the Magnificent Seven must be expensive. I think for those who don't look into the details, I mean, those are the misunderstanding. But if you just look at companies by companies, you will see that actually comparing Google versus other big techs, they are quite cheap. Later, I will show you the comparison. But before that, let's look at the PEG. Just a recap, right? PEG is just that you take the PE and then you divide it by the growth rate. And because their growth is okay-ish, like 15%, PE isn't that high. It's like 20 times. You divide these two numbers, you get something PEG of like 1.2. And 1.2, right? Of course, if you read books, right, they will say that, oh, below PEG of 1 is very cheap. Above 1 is no longer cheap, right? But I think right now, because the entire market is towards the sides of overvalue, so under this kind of environment, if you have companies that's having a PEG of 1.2, definitely is still, I would say, quite attractive in terms of their valuations. And you can see that historically, the range, right, is between 1 to, let's call it like 2.4. Relatively speaking, if you just compare Google's PEG versus their historical PEG range, right, it's also trending on the attractive valuations. Okay, next one. So this is the investment analyst EPS estimate 5 years ahead. So they are actually expecting the EPS to grow at around 16.65%. And these numbers, I would say, is fairly stable, because aside from the period in 2021 where it looks quite high, and after that 2022, it dipped to about 14%. Other than that, right, these numbers has been ranging between, let's call it like 15 to 18%, right? So 16.6%, I would say, it is quite a decent growth rate. Definitely, you cannot compare companies like Google, which is like super big companies, right, versus some startup or some smaller companies that's still experiencing high growth, right? This is definitely a matured companies, but still, it is not a matured companies with like low single digit kind of growth rate. It's actually, at least the analyst is expecting them to grow at 16% over the next 5 years. And this one can be a mix of between revenue growth plus margin expansion, right? So I would say still this is decent growth rate. Okay, this is the comparison, just to compare all these Magnificent Seven companies, where's their forward PE is, right? Definitely the highest is Tesla at 80 times forward PE, and you can see clearly that Google is the lowest one, it's at 20x PE. The second lowest is Meta at 23 times, and the rest, right, let's call it like Microsoft, Amazon, Nvidia, these are, like between 30 to 40 times PE. I would say is on, like at least on the PE basis, right, they are higher than Google. Google 20 times PE, but there's reason to it now. You can say that it's it might be due to antitrust and some other issues, or concern about whether Google is leading in terms of AI. I mean, these are some of the narrative that's around, but like if you take away all those noise, right, just focusing on the financial metrics, right, 20 times PE, I would say definitely is quite attractive. I mean, this is always a good overview in terms of like understanding their business. So still main part of their business is search advertising, and then the other one will be YouTube, and then of course there are other businesses. Say for example, their cloud. You can also include that. So usually I look at this is to understand where's the source of their revenue, and then also I want to look at how thick is the green bar, right? Because that's one just shows us like how much of their revenue flow into the profit. So definitely for Google's, I think their profit margin is very healthy. The green bar is very fat. I mean, let's say if you invest based on like financials, right? I think Google definitely is companies that the investor love. Okay. Now, just want to quickly go through the business model, because I think this is very important. When I read through the like earnings transcript, I find it hard to like just pick up a few things from the earnings transcript and just bring up to say which are the important ones. So why not I just take these to rehearse a bit on their business model and why I invest in these companies, and why I think this company is fantastic. If you haven't heard of this aggregation theory, right, the link is at the screen sharing here, or I'll put it in the description. So you can read the blog is very detailed in terms of like explaining what is this aggregation theory. So basically, it is saying that pre-internet, right, all these like problems that people are facing, how these problems are being solved or being addressed, right, is very different as compared to post-internet. Post-internet, there's this concept called aggregated. So aggregated means that everyone's have a lot of problems on, let's say, certain things. In this case, right, in Google case, is that the problem is that how to look for certain informations. Okay, in the past, right, let's say if you want to look for certain informations, right, there's no internet, and you can just ask people around. You can go to library, and even if you go to library, it's like local libraries, right? There's no one big giant library that serve everyone on planet, right? But now with internet, all these informations are being aggregated. And in terms of the users, right, like every person's in the world, when they think of something, they want to search for certain information, right, they will go to internet. Okay, so all this search, you think of this search, right, is like everyone have a problem. They are looking for certain informations, right? So all these problems will be aggregated, and then we need to pay attention to which companies are the one that's sitting in between the problem and the user, or you can call it like where's the source, like source meaning that on one side, right, it is actually the web pages. These are the informations that need to fit into users, and then on the other side is the user, right? So which are the companies that are actually sitting in between? In this case, Google, they're applying this aggregations model, and they are serving the distributions of all these web pages. This is their business model, right? Because this is very important. By having all this demand, right, or all these user on one side and all this supply on the other side, and they are sitting in between as the distributions, right? They are actually very, very powerful. And basically, they just need to hold all these users on their platforms, right? And then at the same time, all this supply will automatically come. Okay, they will meet together. They are just in between serving as the distributions, right? And the good thing is that they serve the entire world, right? So that makes them very, very powerful. And as long as they maintain all this on their platforms, right? And now comes to the monetization side. The monetization side is very easy, because they are basically selling real estate, right? They're selling real estate of attention. As long as you're on their platforms, you're looking at web pages, you're on YouTube, you are listening to this video, so there will be ads that pop up from here and there. And when they serve all this, right, they're serving the attention, right? They are providing the attentions. They can just, sell it to the advertisers and earn big monies from it. So to understand whether Google business will continue to be successful in the future, you just need to ask yourself, right, whether they are able to keep all these users on their platforms, keep all this demand, keep all these eyeballs. Okay, so this is very important. That's why when ChatGPT came up, there are people who are afraid that whether Google will lose out to ChatGPT, people will switch to ChatGPT or let's say other AI platforms to look for answers, right? And they are pivot away from Google. Definitely, there's some concern there, right? Because people are afraid that the eyeballs will, like exit from Google platforms, right? I would say that definitely there are some concern there, but Google's also, they know about it, right? That's why they have been, like spending a lot of money in capex in terms of hiring the best minds just to make sure that this flywheel, right, these platforms, right, will continue to getting better and better, and they cannot afford to lose out when it comes to this war against others. So basically, pre-AI and post-AI era, it's just that now the games is slightly different, right? Maybe not slightly, it's a lot different. But anyway, this is new era. Everyone still have to do their R&D. Everyone still have to try error, build new business model, so on and so forth. So I think Google will be in here, and they won't, cannot afford to lose. So they are, working very hard. Okay, so this is basically the flywheel. I won't go into the details, but basically, as long as they are able to keep their platforms around, and all these users, right, will actually provide the informations to make the platform better. So this flywheel, I would say, is still around, and this flywheel, right, is an advantage to Google. Okay, basically, when it comes to AI, they may not lose out, right? So because of all this flywheel. But of course, the new comers, they are, they have some sort of like first mover advantage. I'm referring to ChatGPT. So I would say they also don't, underestimate all these newcomers. So this is a war that they are all fighting. But as an investor, sometimes you don't need to pick side, right? You can invest in both. So I think that's the good things. Okay, now come back to the earnings transcript, right? I would say that in terms of keeping the, the users, this one maybe I don't need to explain, because I'm sure that anyone watching this YouTube, right, you are already on YouTube platforms, and I'm sure that you are using Google search when you are looking for certain informations. Okay, so that one, I would say you just pay attention to yourself, and you will know whether Google search is sticky or not coming from user perspective. But I will go through what is being shown on this page just to say that, okay, how Google is making use of all the generative AI capability, right, is actually helping the advertisers. Okay, so you can go through the list here. There are stuff like, like ad content creations, responsive search ads, performance max campaigns, personalized experience, automated insights, audience targeting, automated managements. All these things, right, is actually tools, new tools that they are using AI to enhance all these tools to help the advertisers. And we are seeing a lot of good results coming from here, because imagine that last time to come up with some pretty stuff to show on the ads, right, they need to get, let's say, human to do that, and then you can only do a few, because all these things is like everyone costs money to do all this advertising, right? Right now, with the help of AI, you can actually prompt the AI to come up with pretty stuff, all the marketing materials, and you can even do all this on an automated basis, right? So definitely, I think they are using all these tools when it comes to trying to win business on the advertising side. And definitely, they are a lot better as compared to, let's say, like traditional advertising space, right? So I would say that Google, being good at all these things, right, they will make full use of all these new tools to win businesses from all the traditional advertising space. Definitely, I would say this is the impressive part. And I think all this, right, actually help out when it comes to their, margin expansions, when it comes to grabbing more revenues, because they help their customers gain more users, gain more businesses, right? So I think all in all, think of Google as an advertising companies, and think of how all these new tools can help them be a better advertisers. So that's how I see it. I would say that definitely in terms of the works that they have been working on, right, it's really helping them a lot. Okay, of course, we cannot end this and just paint a picture that everything about Google is good, right? As I say, the 20x PE, maybe you are thinking that, oh, I'm, like Google's boo. I think that the market is wrong. 20x PE is stupid, crazily cheap, right? Of course, asking a boost, they might say that, but we cannot downplay the like the threats or the competitions coming from all over the place, right? Say, for example, ChatGPT just launched ChatGPT Search. I've seen that. It's actually when you use ChatGPT, right, there's this like a globes kind of icon there. If you click there and you do your search, right, actually what happens is that instead of like giving you a response based on the text that they have been trained on, right, now they will serve you links, okay? Basically, there are a lot of stuff with their explanations, and then there's also links there. And then from the links, you can click on the links. And basically, this is really like they are entering Google's search space, right? They are trying to compete with Google. Very, very clear competitions. But I've tried a bit on like using this. So far, basically, by the way, just a caveat, these things just came out like a few days ago. So when I use it, I feel like, okay, interesting. They are serving links, and I can click into the links. But I can't judge whether the the quality of the links that they provided is as good as the ones that's Google providing. My sense is Google is still better, but all these things are evolving, right? I don't know whether, let's say 1 year down the road, can they actually make this search or so-called search for web page links, right? Can they make it even better than Google? These are the things that I have no idea. But the things that I can share is that I have been using ChatGPT a lot. So I would say that from that sense, right, ChatGPT also have some advantage because in terms of the context, they can actually, like you can put in a lot more context. Like basically it's not like just keyword search, right? You can basically, write a big paragraph to explain to ChatGPT what's your problem, and then they will serve you the necessary links, right? I would say that is also something that is quite impressive, and it may not be something that Google search is good at the moment, but they are also working hard to, embed all this. So more and more, I would say that this AI search versus like Google web page link kind of search engine, right? These two, it were getting closer and closer, and they are all trying to win your attentions and my attentions, right? So basically, I would say that try all this, try ChatGPT search, continue with your Google search, and then just observe over time which one is getting better. As a user, because you're a user, you will know, right? So I would say that's the way we all do due diligence. From Chiwi, everyone talks about how sticky the Apple ecosystem is, but Google also has a really sticky ecosystem stretching across email, search, video, contact, calendar, and more. I head up digital marketing for an India agency and can confirm on the advertising front, Google has been improving its offering through the use of AI. RSA and PMAX have been good to drive performance. One of Google response to ChatGPT has been including AI overview on their searches too. Yeah, I think very good point from Chiwi. And I think that for those who you really pay attention to this, right, you can actually feel that because right now, if you just do a Google queries, right? Sometimes you don't need to look down the links and then click into links to get the results. Actually, the AI overview already give you, especially those like very quick search, right? I think even people ask like Google's, right? Like you know that let's say if you just straight away serve the answer and people don't go into those links, actually that means people get the answer quicker. And then if people get the answer quicker, that means that there will be less time spent on, let's say, the Google search, and then less time spent means that less revenue because that's how they run all the advertisements, right? All the ads are flying around, right? Actually, they answer that yes, it is true. If people get their answer immediately, right, meaning that from advertising point of view, it just not as good, right? But actually, I think they explain it very clear that this is not a big problem from Google because as long as people get the answers, right, and they have good user experience, right, they will always come back to Google platforms. So that's why they need to make sure that their Google search, right, when it comes to search, they have to be number one. They cannot let people go to, like 2 or 3 pages to look for the information that they want because the moment the other companies come up with a better search, right, then they will migrate over. Then that's the the Google will start going downhill from that point onwards. That's why they've been working very hard to keep the retentions, make sure that the users have good user experience. Not racist, but indie. Oh, sorry. I thought that was a typo. So let me read Chiwi's comment here. Not racist, but he wasn't referring to India agency companies. It was an independent agency. So that was my bad, okay? I thought that was a typo. From Kelvin, any thoughts of their cloud market share is still growing strong given its smaller base? I wonder if they can sustain it. Okay, this one, right, while we are here, right, let me just quickly go through the page, okay? Because let me start from here, asking about the cloud market shares. So if you look at these cloud market shares, right, definitely the top 3 one, AWS top 1, then followed by Azure or Microsoft Azure, and then the third one is Google Cloud. You can see that their market shares is 31%, 20%, and 12% respectively, okay? Definitely Google's is solidly at third place. Next one, just look at the trend, right? So I would say that Amazon is slightly coming down, but still they are trying hard to maintain their share of about, let's call it like 32% market shares. And then tools that are actually trending up in terms of the cloud market shares, right, is Microsoft. It's very clear, right? The blue line is going up. And then Google, the green line, is going up also. These two are trending up. And I think they are taking shares from Amazon. Okay, the rest, right? Let's say like Alibaba, Oracle, Salesforce, you can see from the chart here, right? They are all trending down. And others also trending down. So I would say that these two, right, Microsoft and Google, these are the one that's actually taking a lot of market shares now. And if we compare these three, right, if you look at the percentage increase, right, I would say that Google at 35% increase, that's really, really impressive. Because before this, right, before looking at this chart, right, I was monitoring their growth. I know that Google's their percentage increase is like tend to be higher just because their base is lower, which is in line with your observations. But if you look at the recent quarters, right, it just jumped from 29% growth to 35% growth. So I would say that when you see businesses like the cloud or Google's cloud, right, they've shown very good tractions. So when we observe all this, right, we need to give credit to them and maybe need to, like reshape my expectations, because I always thought that when it comes to cloud, the two that I need to pay attention to is Amazon and Microsoft. But right now it seems that Google's is doing well in this space. And how I want to, when it comes to investment, right, I would say I would rather, invest in all three of them to make sure that regardless which one is the ones that's leading, right? I will have some investment, some stake into these companies now. So I would say that Google's has been tracking well in terms of the cloud business. And then lastly, this is also another comparison. I think this one is just comparing the top three, AWS, Azure, and Google. And you can pay attention to the second one, which is the quarterly net new ARR. I think this is referring to the new business that come in. Okay, so you can see the AWS is, I think, 4.7 billion. Azure is at 4.3 billions, and Google is at 4 billions. So definitely, if you look at the market share, right, and you look at this, right, or you look at this, right, you might think that, okay, Google actually, they are, like 12% compared to AWS of 31%. But bear in mind that AWS, right, they've been in cloud business for many, many years. So they started first. So they have the first mover advantage. But Azure also came in, and then they are working hard and they are making use of the strength that they have, right? So they have 20% shares. And Google just make use of their capability when it comes to AI. Also, they have strong offerings. So if you look at this chart, you might think that Google is like, 1/3 of their size. But if you look at the new business, right, actually they are not far behind AWS. So very, very, very promising when it comes to cloud business. So that's the answer to your questions. When it comes to cloud business, right, they are all growing. The entire cloud business is growing. So when you say which one is winning more share, even the ones, let's say like AWS, right, they are losing shares, right? But if you look at their absolute growth, right, it's still growing. So I would say it could be, like win-win-win for all three of them. Maybe not too worried. This is definitely not a winners take all market, right? So I'm not too concerned about like who is winning here. But I will hedge my bet by investing in all three. Everyone talk about TikTok being used by Gen Z for search, then ChatGPT spell dooms for Google search, but I think their search revenue has been growing quarter on quarter. Yeah, definitely. If the search is not growing from quarter to quarter, right, it is impossible for Googles to come up with this kind of numbers, right? This kind of like net income numbers. So that's why, when it comes to investing, right, of course, we want to pay attention to the narrative, because narrative, I won't say that they are all wrong, okay? And they are usually, like early when it comes to, because by the time you are looking at financials, these are already late, right? So if you want to have some insights early, you need to read all these news, you need to pay attention, do your own diligence, and think like you are the user, you can pay attention to their product, right? So those are the, the early insights. So the narrative is definitely important, but sometimes narrative, right, can get carried away, whereby you think that, people are saying that ChatGPT is, like winning the search. I mean, sometimes you just pay too much attention to this and you don't look at the financials, right? You might think that, I don't want to invest in Google, they are dying, You have that kind of like wrong perceptions of the companies. There are some risks if you just pay attention to the narrative and not the numbers, right? Because if you pay attention to the number, you see all these numbers, right? It cannot be a company that's failing and still generate this kind of numbers, right? So I would say that pay attention to both and comes to your own assessment on this. Let's move on to Microsoft. Total revenue, financial quarters, so they are generating 65.58 billions of revenue. On a last 12-month basis, they are generating 254 billions of revenue. Lower than Google, but still impressive. And one thing, right, one difference between Microsoft and Google is like you look at the trend, right, it's almost like straight line up. There's almost no volatility around their revenues. I think this one is basically, you can explain it using their business model because quite a significant portions of their business is recurring basis. Say for example, those corporates using, let's say, Windows, using Microsoft Office, those are subscription, right? So when it comes to subscription, I would say that it's more stable, okay? It's not like, there's some downturn in market and then people switch from Windows to Apple Mac, right? So that's why it's very stable, I think, and that's also why investors like Microsoft. And then if you want to compare their revenues numbers, right, although it's not as big as Google, but still it's one of the highest. And you look at 245, this is basically not updated, right? 245 billions of revenues, ranked 21st, and it is on par with companies like Costco, Shell, Toyota. These are companies that selling, expensive, big ticket products, right? So, but Microsoft, 245 billions. And the other companies, if you pay attention to, right, usually they are of like lower margin. For Microsoft, their business is definitely high margin. Their growth rate, this is comparing the quarter 1 year before, and similar to Google, it's like 1% higher, 16% of growth rate. Okay, I would say 16% on a high, on such a big base is still very healthy, and you see that it is fairly stable, right? Except from January quarter when they are almost flat. Subsequently, you see that they have been growing for about like 10 to 20% range. So very healthy growth rate. Now, I think this is the best part about Microsoft. You look at their gross profit margins, right? 69.35%. At first, when I look at this chart, I was like, how come the the margins that keep fluctuating around, like quite a big fluctuations. Then I look at the scale, right? I was like, oh no, the scale that's the one that actually makes it look like big fluctuation. So I adjust the scale slightly, and you can see that their margin, right, is like between 66% to 72%. Such a tight margins, right? So they've been maintaining their margins for quite some time. This is a business that Microsoft is the one that set the price without afraid of competitions. I think this is a very, very huge business. And then of course, if you look at the net margins right now is at 37.6%, comparing to the previous quarters, huge jump in margin. Zoom out a little bit. Maybe don't focus on like, last 1 year before the quarters can be higher margins. You just zoom out a little bit and just focus on the the level, right? It has been trending between, let's call it like 32% to 38 or 40% range, right? It's very, very tight range, and they are able to maintain their margin. I think this is definitely a sign that the company is having a strong moat. Their customer can't run away from them. Microsoft is the company that dictates how to price their products, and still customer will stick to them. That's margin. And then of course you combine the higher revenue plus stable margin, you can see that their net income is at 24.65 billions in the recent quarter. This is a record quarter. And then of course on rolling 12-month basis is at 90 billions. Okay, 90 billions, quite close to Google. And then free cash flow, 19 billion of free cash flow. And if you look at rolling 12 months, they are generating 72 billions of free cash flow. Okay, so this is definitely higher than Google when it comes to free cash flow, and that's why they have all this money to do acquisitions, right? So say for example, just not too long ago, they acquired Activision's companies. So now all this profit from Activisions also flow into their business, right, and help even boost up their free cash flow. So definitely Microsoft, when it comes to financial metrics, right, is very, very impressive. Let's look at the PE. Okay, so PE wise, right, definitely is more expensive as compared to Google. It's at 31x PE. But if you look at their PE number as compared to their historical, right, this currently it is not like super expensive, because the range, right, is between 24 to 36, right? So 31, I would say 31 is still okay-ish, but I won't say 31 is cheap. Definitely it is not cheap, right? But if you think of like just S&P 500 is having a PE of, let's call it like 24 or 25, Microsoft at P of 31. Of course, you are paying slightly more using forward PE as a metric, but remember that Microsoft, when it comes to the quality of the earnings and the quality of the business model, their moats, everything's right, and the growth prospect, right, I would say that Microsoft is still a more attractive business to invest in as compared to, just S&P 500. That's why I've, investing in this company and not just S&P 500, right? It's because I do think that companies like Microsoft has better prospect. Next one is to look at the PEG. Of course, if you look at the PEG, because the forward PE is already at 31, divided by their growth rate, you get something like 2.4. 2.4 is very hard to say that they are cheap, but you can say that look at today's level versus their historical PEG. It is, I would say, around, like close to the median, okay? Close to their average. So quality business with quality management, business modes is there. You cannot expect to buy it at the valuations that is comparable to other companies that, when it comes to quality, not as good, right? So definitely you need to pay for the quality lah. So that's why PEG is slightly on the high side at about 2.4. And then if you look at the EPS, analysts estimate they are projecting a 13% increase in the EPS over the next 5 years. This is slightly lower than Google, but still I would say 13% EPS growth, good to invest in. Okay, next one, just look at the breakdown of their business. You can see that their business, right, there are a few parts. One part is what they call the productivity and business processes. These are, like Microsoft 365, their LinkedIn, and then they have the cloud business, the Azure business, and then they have the more personal computing. This is their Surface, the Xbox, and then if you look at a business, right, it's very, very diversified, okay? To the extent that when you read the earnings transcript, right, sometimes it's quite tiring because they really go through all these different segments and talk about the segments. Some of them growing at 30+%, some of them growing at like single digit, some of them actually drop, right? So, but overall, maybe don't think them as like just, different business segment. It's almost like different companies already aggregated in one, but they share the common characteristic that all this, right, is like, like software businesses. And then these are the businesses that will actually benefit from all the AI stuff that they're working on. So I would say that's why invest in these companies. You can expect to get a good results because of all the good stuff that they're working on. Okay, revenue breakdown 65.6 billions of revenue. I would say that if you look at how it flows down to the net profit margins, the green bar is like super good. Just from the visual, you can see that it's even better than Google business, right? That's why their PE is not low. Let's quickly go through a few things that I think is interesting about Microsoft. The first one, right, is that Satya basically said that all up, right, their AI business is on track to surpass an annual revenue run rate of 10 billion next quarter, which will make it the fastest business in our history to reach this milestone. So I think what happened is that if you look at Microsoft, just because their existing business, right, say for all these Windows, Microsoft, Office, and so on, or even Azure, right, you add up all together, right, their businesses is already very big. When you have a big business and then you have all the new stuff that they're working on related to AI, when they reach 10 billions, actually as a ratio compared to their existing business, so it makes things become like disappear. People don't see it because 10 billions is nothing as compared to their existing business. But if you look at that 10 billions just on its standalone basis, right, you will notice that actually all this AI stuff, right, is like a startup within a big companies. And they have good tractions. They are basically working with ChatGPT, incorporating all this ChatGPT into all the Copilot stuff that they're working on. And basically all this capability, right, is flowing into every segments of their businesses. So they are actually like, riding this wave, and there's a very clear roadmap in terms of how they are going to monetize all these things. That's why I think previously I've wrote a blog post talking about all this AI, right? I would say that AI from Microsoft perspective is that they are really making this AI, like using this AI to make their core offerings like 3 times better, 5 times better. Say for example, like Excel, right, or Microsoft Word, right? It's just Microsoft Word, You use it to type and so on. Nothing fancy about it. But once you have all this ChatGPT capability built in, right, now it can help you draft stuff and so on. So they are actually leveraging the existing product offering that they already have. And now AI capability will just be infused in. And all these things, right, they can build on top of it, like by, offering more stuff, more capability, and charging subscription, and so on. So that's why I would say that there's a very clear roadmap from inventing new stuff and then rolling out to the customers and then charging a subscription fee based on those capability. So I would say that just all this offering, they don't need to even like add new users. Just monetizing on the existing new users is already tons of opportunity. That's why I would say that when you look at all these companies like Microsoft or Magnificent Seven, right? Some may say that their valuations looks high, US companies in bubble, and so on and so forth. But I would say that just look at the opportunities, right? Now we are, don't know what, 2 or 3 years into all this AI build up. So just close eyes for next 3 to 5 years and you will see that this AI, right, will really, really transform their business. So that's why I would say that's the overall theme when it comes to Microsoft investment. The next one, I think on this page, right, is really they want to talk about Azure, because sometimes people might think that Azure, they are investing all this capex to buy NVIDIA chip, and then they also have their own, like Microsoft design chip. Basically, they think of like, okay, Microsoft is just housing all these GPUs and then let all the startup using all these GPU to train their LLMs, right? I think that's one way to view at it. But I think Satya here, he's trying to correct the perception. It's like it's not just housing all this GPU and let people train on it, because there are other companies that do this kind of business. But for them, right, because they have all these different platforms, right? They have, for example, LinkedIn, they have all these Microsoft offerings. So there are different verticals and they are seeing a clear demands or AI demands. And they don't have to speculate whether the demands is there or not, because they can really see it, right? Say, for example, when it comes to LinkedIn, right, they did mention that they are using AI to help, let's say, recruiters to look for candidates. Because candidates, profiles, all these things, these are stuff that's on their platform anyway. And at all times, right, all these recruiters, hiring managers, they're trying to get people to join their companies. And LinkedIn is sitting in between. Instead of let them just look at all these profile themselves, do it on a manual basis. Now they have all these AI offerings that can actually, serve the recruiters and make the process of looking for talents easier, So all this, they can see clearly there's a demand for the offering provided by AI. So this is just one example. I can go down to other examples, but maybe as long as you're using Microsoft Office, you use, let's say, some clouds, right? So you definitely can appreciate that all these new capabilities, right, will be used to enhance their offering, will be used to make their products a lot better, and it will make the competitors a lot harder to compete with Microsoft, because not every companies have the kind of capitals to have all these GPUs to make their products better. So this is definitely winners become a bigger winners kind of situations, because they have everything in-house, right? They have their software developers, they have their GPUs, and they have all these platforms that's already around. So they just build on top of that and make themselves become stronger. So basically that's overall theme about whether the end demands of AI is there. That's overall theme. I won't go into the details of Microsoft, but of course, if you want to talk about the flywheel, definitely they have their own flywheel. The users, when they're stuck with Windows, they really can't get out. So that's very clear. You just look at this chart again, right? Let's come back again. So Microsoft, they are able to go from 15% of market shares to now close to 25% of market share. I think just shows that when it comes to executions, they are really execute it very, very well. Okay. When it comes to Azure or their cloud business. And now with their deep partnership with ChatGPT, and remember ChatGPT is still the best AI companies that's around, right? And these tight integrations and also the stuff that Microsoft is working on behind the scene that's unrelated to OpenAI. There's still a lot of stuff that's working on, right? So I would say that there are, the opportunities is there. So that's why I would say that this is a companies with a very bright prospects. Thank you so much for tuning in live. Next week, we'll continue with 2 more companies.